I'm your host, Keir Reynolds, and today we're lucky enough to catch up with Adrian O'Brien, VP of Business Development and Communications with Midnight Sun Mining. Trades on the TSX Venture Exchange with the ticker MMA, as well as on the OTC with the ticker MDNGF. Yeah, say that 3 times fast. Hey, Adrian, how you doing today?
Doing great, Keir. Always good, man. It's great to catch up, and looking forward to walking you through all this new information we've been putting out, all the news and all that stuff. So, these are always good chats. Let's dig in.
Sounds good. Well, yeah, you're a favorite of mine to sort of have on. This will be our third time. I've really enjoyed our last two. You really give us quite a bit of detail and aren't too quick with the answers, which is nice, and great depth of detail. And clearly, you're pretty good at your job. You've got a pretty cult-like following. I put out a bit of content saying I was going to interview you, and boom, quite a bit of response. So a few of the questions I'm going to ask you actually come from some of the viewers and some of the people that follow on Twitter. So good job there. So just to kind of recap, this is our third time. You've been on. The first time was back in November. Your stock was trading in sort of mid-40s. Then we caught up with you again sort of late February. Your stock was sort of in the mid-60s. And we find your shares back sort of hanging in there pretty nicely in the mid-60s. So since we first started chatting, you're up about 50% in terms of the share price appreciation. So not too bad, not too shabby for a copper story. Copper's been, it's been on again, off again, obviously charging very nicely here for 2025, performing quite nicely. So absolutely. I look forward to unpacking a few macro things. But maybe before we kind of open up the deck and sort of do a bit of a walkthrough, maybe you could give me a little bit of, or explain to my viewers, some of them who might not be familiar with you. Who are you, and how'd you get into the mining business?
This is a long and winding story, Keir. You're taking the lid off, man. This is like my 28th year in mining. Believe it or not, my part-time job in high school was working for a junior mining company, building packages to send to brokers, and my favorite job of all, faxing news releases. So imagine that changeover from our email lists and everything now. Back in the day, we would have our our shareholder list, fax machine. We'd have to fax each news release individually and do that. So anyways, those were my, very, very fancy jobs I did back in the day, putting those packages together. But what it did was, by osmosis, you soak up, 17, 18 years old. You're standing there for 4 or 5 or 6 or 8 hours, whatever it was, putting these packages together. And you're looking at geophysical maps, you're looking at news releases, you're talking to geologists. I mean, you literally become infused with the business and the knowledge. And for me, that really led to a lifelong career. I never left. I love the business. I love the industry. I had lots of different things I've been involved in my life, but mining has been the paramount thing throughout everything. And it's such a cool business. What we do is so interesting. I think people miss on the Indiana Jones factor, right? Like we're out there exploring. We're looking for things that matter to every single person. Every single person watching this, every single person that doesn't even realize that the importance of metals in their life. This is grassroots entrepreneurial business to the 10th degree. We're out there finding things that matter to every single person on the planet. And it's exciting. It's exciting. There's all kinds of highs and lows and ups and downs. But at the end of the day, we're doing something important and having a lot of fun and excitement along the way. So it's a pretty cool business.
Well, I'd be remiss if I didn't ask you, what's the story with the guitars behind you?
Oh, I told you it's a long and winding road. So I've been involved in music and the arts my whole life. Through my corporate career in mining, started out in IR, started out working for junior, as I said, in high school. Eventually became a CEO, ran my own companies, financed them, built them, found projects, and was involved in a lot of cool things, but never lost my connection to the arts. And the two things I was involved in were photography and music. So I played guitar since I was 8 years old. Used to play and sing in bands, and don't ask me to do it right now, but that was that was a big thing for me. And somewhere along the road, as much as this is the craziest juxtaposition probably in the mining sector, one of the weirdest ones anyways, I ended up starting to photograph bands and ended up becoming a commercial music photographer as like an alter ego to my corporate mining job and my corporate mining world. And it was a completely separate thing, but at the same time, somehow worked and I was able to do it. So I worked for years and years. I was sort of a hired gun for the music magazines, musical instrument companies, record labels, working directly with the bands themselves, and ended up photographing, most of the bands I grew up listening to and emulating in my attempts at getting on stage and playing. So, it was a super cool thing. And that eventually led me to a guitar company. There's only really two guitar companies in Canada that are notable, one called Godin, one called Prestige. I ended up getting involved with Prestige, mainly introducing them to some of the bigger artists that I worked with as a photographer, and eventually ended up running Prestige. So one of the things I was involved in was running this guitar manufacturing company, designing and building guitars, building them for artists, and of course, working with all of those guys. And I eventually left that behind when I was working with Mark O'Day and Oxygen Capital. Another musician. Mark is a fantastic guitarist. He sings in a band, if you didn't know that. He's awesome. It was one of the things that he and I connected on early on. And, I eventually joined forces with Mark to work on a number of companies for Oxygen Capital. And at that point, left the guitar company behind. I'm still affiliated, still know them, still connected. And I still keep in touch with most of the musicians I used to work with. But that's the story behind the guitars. Most of those are Prestige. The black one is one that we put together for Slash. He's a Gibson guy, but at the end of the day, he plays a lot of stuff in studio that's not. So that was something specialized we did for him. The white one down here is a signature model I did for Todd Kearns. He and I designed that together. Todd, of course, is the bass player in Slash, featuring Miles Kennedy and the Conspirators. He also plays in a band too, sings, and he was in a band in the 90s in Canada called Age of Electric. So I warned you, man, it's a long and winding road, but the lots of twists that are kind of interesting. And I still do the photography, but nowadays I focus more on my own artwork, which is exhibited in galleries. And actually, the last big solo show that I did was in 2020. I usually do a show every couple of years, but of course, COVID put a bit of a damper on that. But the last big solo show I did was in 2020. Actually partnered with Pamela Anderson, and Pamela and I worked together on a show that was in Vancouver. It was at a gallery called Cali Rosso, which has moved into the Pan Pacific now. But Pamela and I put this show together, a collection of my work. And it was awesome. It was such a successful show, and gearing up. Eventually I'll do another show over the next year or two. So, but a little busy with work in Zambia right now. So that's all going to have to wait.
Well, it's always very interesting to hear people's backgrounds, and I think everybody likes to know like the personal story and get a good vantage point into the character of who they're been chatting to about their stocks and just that people actually have a life outside of this stuff, because some people it seems like they just eat, sleep, breathe, maybe in a bit of an unhealthy way, only one thing. So nice to know that you've got some other hobbies and some great connections there. So good.
That too. It really is one of those things, right? Like I talk about this with Mark O'Day all the time, and other people that I work with, of course. There's a lot of people that are really interesting in this business that have lives, outside of mining, and maybe they're involved in music or the arts or like whatever they may be, sports, all kinds of backgrounds, and everybody has multifacets, and it's, as you said, there are certain people that don't, but I love digging into the human stories behind all this stuff. I actually find it one of the most fascinating things about our business. And I know when I look back to when Mark O'Day and I met and became friends, that connection was over guitars. We met through totally different channel, sitting there talking about stuff one day and talking about mining, and all of a sudden the topic shifted to guitars, and we ended up talking about Prestige, and then he told me about a new guitar he had just bought. I know the guy that built it, and it just turned into this, deep, great friendship, but also, this connection over music. And I find in our business, there's no point in hiding who you are. Like, it's great to have multifacets. Put it out there. Let's see who you are. And you tend to attract the people that you connect with on different levels. That's what makes the world go round. So pretty cool.
Well, very cool. We have a couple of connections there. I used to do some stuff with Slash's wife, a previous wife, and also Pam Anderson's driver used to be a driver I used in LA as well. So, so some close connections there. Anyway, it sounds like you got the better connection. But why don't we jump into what everybody's looking for? Let's talk some Midnight Sun. Maybe I thought we could maybe you could open up a slide deck. We'll do a bit of a page flip. You have quite a few things sort of going on: sulfide, sulfide, and oxide, and multiple different targets. I thought it might just be simpler and easier for the viewers if we could look at a deck. So, would you mind popping that open?
Not one bit. Let's do that. So, why don't we start here? I think one of the biggest things that obviously we need to talk a bit about is Zambia itself, how important this jurisdiction is, and how much interest there is in this region right now, really based on their global output, where they're going, where they've been. But let's talk a little tiny bit just for a moment about the history of Zambia. This is a district that basically is completely copper-centric, completely mining-centric. We're talking 75% of their export earnings are copper. This is a country with a democratically elected government, proper mining act in place. And most importantly, as I'll show you on a slide here in a moment, almost every copper mining company you can think of, every major operator in the copper space is in Zambia today. There's a couple that are, of course, operating world-class mines, and there are groups that are there looking for new assets. But these are the reasons why that is happening. And what you're looking at is a top-notch global jurisdiction. So really, when you think about Zambia, you want to think about its positioning in the global space and looking at what President HH is doing right now. So you have not only a democratically elected government and a proper mining act in place, you have a president that is looking at this and saying, we're number 7 or 8 or 9th in the world, whatever they are, maybe they're 6th. We want to be number 2 or 3. So how are we going to do that? We as a nation are going to stand behind the miners that are working in our country. We're going to help them bolster production. We're also going to go out and attract new players, majors that are also in the region. In this case, Ivanhoe and Rio Tinto. We're going to do work. We're going to fly an airborne survey, which they did. They flew an airborne regional survey and generated new targets, and then brought those groups into the country. And now, like you see, Ivanhoe made an announcement that they've taken out 8,000 square kilometers. And, I throw that number around in presentations now that that's out in the open. But sit for a minute and think about how big 8,000 square kilometers is. Our project's 500 square kilometers. And I can tell you, it is a big chunk of property. I can't even imagine 8,000 square kilometers of land. But that's what Ivanhoe has taken out, and simultaneously launched a very aggressive exploration program on that property. So you now have the best in the business, Robert Friedland, standing up, new cheerleader for Zambia, putting his weight behind it, stepping in. That stuff to me is super exciting, but it's also a show of what the government of Zambia is doing. We've been there for 14 years and we love it. It's a fantastic country, easy to work in, great jurisdiction. All the positives you could possibly hope for. But now you're seeing other groups stepping in. And this map, which I've put up, to me, this sums it up. What you see here, you've got Ivanhoe with 1.4 billion tons at almost 3% copper at Kamoa-Kakula, but that's in the DRC. That means they had to give up 64% of that asset in order to march it forward. In Zambia, we own 100% of our assets. The Zambian government doesn't nationalize. They're not taking a piece of your project. If you look at China molybdenum, they've got 122 million tons at 2%. At the Tenke deposit, Tenke Fungurume sold for 4.3 billion for half of the asset a few years ago. So that gives you an idea of the value, and that's with a DRC discount applied. Move down into Zambia, you see First Quantum Sentinel Mine. It's 1 billion tons at 0.51%. Lumwana, which is right next to us, is 1.62 billion at 0.52. And that's a whole, I think we should dig into that. I do that in every presentation, but in a moment, let's dig in a little bit and talk about how Lumwana got from a tier 2 asset to a tier 1 and this 1.62 billion ton size that it is now. And then, of course, you've got Kansanshi, First Quantum's flagship asset, 6 kilometers away from our property. It's a billion tons at 0.66. That is a massive deposit. They just opened a new sulfide lens that's 40 years worth of mine life. And I think that's a differentiation that we should kick into as well, Kier. This is sulfides versus oxides. What are companies mining? What are these deposits? How do they look? What are they situated like in the ground? What kind of geology are we talking about? And Kansanshi is a really interesting case study because it's not just a sulfide mine. They also have an oxide component. And that plays a role in what we're doing on our property because we have 2 styles of targets. We're really working on 2 things simultaneously, or 3 if you consider all of the targets we're attacking. It really is a critical part of our story and a critical part of how the Zambia-Congo copper belt works, particularly with Kansanshi. The other thing that I like to point out on this map is what you don't see. What's hidden behind the layers here. We're listing out all of the companies that are actually working there that have operating projects. What you don't see are the companies that are there looking for a way to move forward. Anglo is working out to the Kalahari or out in the Kalahari Sands, where Ivanhoe and Rio Tinto are now working. It's an area they still have dome style targets, but they're mostly covered in sort of 200 to 400 meters of sand cover. So much more difficult, much more challenging to explore. But you also have BHP in the area. You have Freeport-McMoRan sniffing around. You've got, of course, as I mentioned, Rio Tinto, Anglo, all these big companies, but they don't have assets that are moving into production. What are they looking for? Assets that can move into production. So right away, I look at this and say, there's going to be an opportunity for M&A here. Any company that is at the forefront of development, that is moving assets into that development pipeline, are going to be a target for M&A. The likelihood of those companies both finding a brand new discovery and moving it all the way to production in time to hit that copper deficit that's looming on the horizon, simply not realistic. So if there's companies like a Midnight Sun that can find something, develop something, move it forward, and in our case, we have multiple assets that are already breaking out of that early discovery phase. If you fit into that development pipeline, in my view, you will be in that crosshair for M&A, and that's where we want to put ourselves. So that's what this is all about at the end of the day. So that's kind of a good snapshot. And then, of course, this dashed line, which we've added to our maps most recently, that's the Lobito corridor. So, Kier, are you familiar with Lobito and what it's all about?
Maybe not the one you're going to talk about, but go ahead.
I'm confused with Lobito, my friend. The Lobito corridor is a new rail line. And what that rail line represents is access to these assets at a Western port to ship concentrate. So this is being backed by the U.S. government. You will have heard Robert Friedland talk a lot about this. The Lobito corridor is very important. And this is what is basically what it looks like today. It cuts right through all of the major projects in Zambia and specifically Midnight Sun's projects. So you can see the Lobito rail line that's planned would cut right through the middle of our Solwezi project and through the middle of our Luswishi Dome project, which is a new acquisition we took on recently. Very, very favorable terms for us. We don't have to do any work for quite a long time. And we can earn into up to 80% of that asset. Luswishi is the only dome that doesn't yet have a deposit that's proven up. And a really critical piece of ground in terms of, again, being at the forefront of development and making sure that we're a target for M&A when the time comes. So it's a new asset, something we picked up, but just to point out that planned rail line would run through there. So then I always like to zoom in, look at this from a more regional perspective in Zambia and look at what we're dealing with. And now you can really get a sense of, let's ignore the DRC. Let's focus on these 3 key projects, Lumwana, Sentinel, and Kansanshi, and the positioning of Midnight Sun. There's no arguing. We are right smack in the heart of the belt. This is as critical a land position as you could possibly have. And what I always say is that the differentiator with our project, I like to explain this in pretty good detail in my presentations because I don't think a lot of people realize kind of how these copper deposits that are in the belt are situated. So on this map, you can see these yellow dashed lines, and those yellow dashed lines are outlining what they call the basement domes. Okay, so it's the domes region. That's named after the basement domes. Those are ancient rocks. They are the oldest rocks in the belt. And these copper deposits tend to form in this orangey brown ring of rock called the lower rung. And if you look across the whole belt, 85 to 90% of the copper deposits are located in that lower rung rock unit. So that's typically what people focus on. Now, in order to have that younger set of rocks, you need these basement domes. What differentiates our project is that we don't have one basement dome. Each of these mines, Sentinel, Lumwana, Kansanshi, is centered on a basement dome. We have 3 that sit under our property. And what that's done is created multiple systems. So if you look at Kazhiba, you look at Dumbwa, you look at Mitu, they are unique individual systems, each capable of hosting a 1 billion ton deposit. So therefore, they're targets on their own and need to be attacked as such. The other thing that's worth pointing out on this slide is the fact that Lumwana, which is the biggest success story in Zambia right now, Lumwana has become an absolute world-class tier 1 asset, and it's now 1.62 billion tons. When Barrick acquired this, they paid $7.3 billion for it. They paid that for an asset that was 900 million tons or less. They paid that for an asset that didn't have continuity, that didn't hang together. And now you're looking at an asset based on some new discoveries and some work done by our chief operating officer, Kevin Bonnell, that took this to a 1.62 billion ton size. So really amazing. But what I want to point out is there is only 2 deposits in the entire belt, the entire Zambia-Congo copper belt, that are located in the actual basement dome itself, in those ancient rocks. And those are Lumwana and Kamoa-Kakula. Those are the 2 biggest deposits in the entire belt as well, by a large margin. The only other system that's located in the basement dome that has never been drilled off systematically is our flagship target, Dumbwa. And that's one of the reasons that Kevin's so excited about it, and we are too, is that it has that analogous aspect. It is an identical geological analog to Lumwana. So there's something really unique about it, and it's super exciting. So those are the big themes. Billion-ton deposits, 0.56% average, and these are shallow. They're stratabound copper deposits. And Kier, you and I have talked about this. We've talked about it over breakfast. We've talked about it on these calls. I think a lot of people overlook what a stratabound deposit means, and I always sum it up this way. Globally, historically, copper deposits are porphyry. You look at all the big jurisdictions, South America, Arizona, pretty much all porphyry deposits. The easy low-hanging fruit has been picked. The easy ones to find have been found. The cheap, near-surface ones have mostly been picked over now. So companies are moving towards very big, very deep, very expensive assets now to look at. And that doesn't really work. A lot of those projects don't work. A lot of those projects that people are pushing forward eventually will not work because they require too much capital. And when I say that, I'm talking 5, 6, 8, $10 billion. And in a lot of cases, block cave models that need all that capital in year 1. Some of those plans just simply don't make sense. So what most big copper companies are looking for are exactly what we see in the Zambia-Congo copper belt, and these are stratabound deposits. Those are flat-lying, shallow, and they're massive. So they make complete sense from an economic standpoint, and they're the best assets to chase right now. And this is an area that breeds basically billion-ton deposits that are all stratabound, meaning they're all less than 150 meters from surface. And it's an area where basically if you find it, you can build it. I won't dive through the whole presentation, but just quick overview. 3 big targets for a sulfide system. That's the stratabound systems that I'm talking about. And they are Dumbwa, Kazhiba, and Mitu. Then we also have Crunch, which is a less explored part of our property. And then we have this oxide copper situation that has unfolded on Kazhiba and Mitu that is separate and above the sulfide targets that we're looking at. So it creates this really unique situation with a lot of optionality for us as we move forward. And of course, that's the key thing.
So it's not had a pretty good run earlier this year, and that was kind of on the back of a bunch of results on your oxide stuff. You had like 10% copper, like eye-popping grades over some pretty wide, thick widths.
Yeah.
So don't be too, make sure we get to talking a bit about that and how that sort of fits into the plan. I think that's part of this cooperation with First Quantum, who's got a mine, who's looking for oxide sort of feed. So anyways, let's make sure we kind of cover that off, but I'll let you continue on.
No, absolutely. I mean, I think what the easiest way to do this is to go through the two different target styles.
Sure.
So let's dig deep into the oxide thing, and let's also dig into the sulfide targets. And, one of the things that I've been covering a lot in my presentations, a lot of people watching this may have already heard this story, but I think this is probably one of the most key facts about Midnight Sun, or key pieces of our story that people can look to as an expression of sort of a stamp of approval, if you will. And it's Kevin Bonnell joining our team. So let's just look at Lumwana for 2 seconds and kind of what Lumwana was. So Barrick goes in and acquires Lumwana 20 years ago. They pay $7.3 billion. Now, $7.3 billion on today's standards is a massive payment for an asset. 20 years ago, it was unheard of, right? So they pay $7.3 billion. They buy it from Equinox, and then they spend 15 years trying to make it work, and they can't. They can't do it. They can't get it to hang together. It's not working. So 4 years ago, they decide to bring in a hired gun, bring in an expert in these strata-bound copper deposits, and they find Kevin Bonnell. Has a pile of deposits to his credit, very, very focused in the sub-Saharan copper belt, really for the majority of his careers, 25 plus years. Barrick brings him in. Kevin puts a team together. He and his team look at Lumwana and they say, you need to be looking for satellite deposits. You need to be looking for extensions. They have an idea. They have an approach that they take. They put that in place. They go out and they find two things, Lubwe and Camaranda. Satellite deposits located just outside of the main Lumwana mine or the Lumwana deposit. And they put it all together. They start drilling it off. And in 24 months, okay, like in our business, that is an astronomically quick turnaround on an asset. I mean, we spend decades sometimes looking at these things, working on them, trying to build them out. In 24 months, right? Unbelievable amount of speed. They give Barrick 1.62 billion tons, 62 years of mine life, 9 million tons of contained copper, or close to it. Impressive beyond belief. That is now a tier one asset, world class. Those numbers were released at a presentation I did in March at PDAC called the Zambia Spotlight. The Secretary of Mines Minister of Zambia and Robert Kayamba, which is the exploration manager for Lumwana, explaining the work that Kevin did. Through a series of meetings we had with Kevin, we didn't end up doing any kind of a deal with Barrick at any point, but what we did get was we got Kevin Bonnell. So he actually left his job at Barrick and ended up joining us and became our chief operating officer because Lumwana and Dumbwa are geologically analogous. They're virtually identical from a geological standpoint. So I always like to lay this out on an actual graphic. So if you look at this, doesn't matter what angle you look at the two systems. They're basement dome hosted, and you can look at this for yourself. These are geologically identical. And Dumbwa is a very special target. It has a very large footprint. It's over 20 kilometers, peak grade of 0.73% copper in soil. This is as good as a target gets in the belt. And it's something pretty unique. So here, I'm not going to just go on and on. Jump in, ask me questions, and let's dig into Dumbwa a little bit.
So what are the exploration plans for this? It's such a big asset, 20 kilometers. Where do you even start? What work have you kind of done so far since you've brought Kevin on, and what does the work for the balance of 2025 look like for this project?
Perfect ask. So let me go to this for 2 seconds. This is the approach that Kevin used at Lumwana. So this is unique. This isn't what most people do in the belt. So in the copper belt, you typically find these deposits by way of a large geochemical anomaly. So you find a surface expression in soil that has lots of copper. The other thing we see is these things that I talk about all the time called kill zone or copper clearing. And because the copper is so high grade in the soil, nothing can grow. And you see these areas that are barren with no explanation. They're barren because there's so much copper there. No trees can grow, no grass can grow. So you get these copper clearings. So when you find one of those, you can do two things. You can go and drill it, or you can do sampling, or you can do something like Kevin does, which is geophysics. So that's actually three things, but don't hold me to it. Kevin's approach is different than anybody else's in that he uses dipole IP as the critical middle step between sampling and drilling. And it makes absolute sense. This geophysical survey, which is what we can call it, it gives you the dip direction and the depth and thickness of mineralization. So if you have a geochemical anomaly and you simply punch holes, you're exploring with the drill bit. That's expensive, time consuming, and really at the end of the day, leaves a lot of room for error. By running the dipole-dipole IP survey, you correlate all of your surface results with the mineralization at depth, and you basically develop a roadmap to drilling off a big system. So that's what he did at Lumwana. That's how they moved it forward so quickly. And that's exactly what we're doing on all three of our targets. So when we talk about Dumbwa and how we move it forward, we take this giant geochemical anomaly, which, as you can see on the screen, that purple blob, 20 kilometers, peak value of 0.73% copper in soil, and a big copper clearing that shows up all over this thing. We know it's shallow. The drill holes on the left were drilled mostly by First Quantum. They're all fantastic intercepts. But we needed to correlate the historical information with what we see at surface and at depth, and that's what we're doing. So let's move forward to this, which is the IP survey itself. So this is now what you're looking at will be the dipole-dipole IP survey. This is that critical step that we take care of before we go and drill. And we've now covered 60% of the Dumbwa anomaly, the 20-kilometer anomaly, with dipole-dipole IP. So every one of those little black lines you see is a line kilometer or a line of the IP. The total is 56 line kilometers. We completed 60%, which is what we just announced. And that gives us a very clear view of what's going on at depth, and not just what to do now to move it forward, but it explains all of the historic drilling, where they hit, where they missed, why they hit, what it looks like, how it's dipping, how it's twisting, how it's pinching and folding. Now it's like a clear picture of all of that. And now we can get moving forward on the drilling itself. So we just announced this last week. One of the key things that I like to cover on this is the cost. Okay. In our business, we should be, obviously careful with cash, get as much done as we can quickly, but also cost effectively. I think you and I would both agree, Keir, that the numbers we usually kick around are in the hundreds of thousands, or if not millions of dollars for most exploration activities. And on a target like this, which successful dome-style sulfide system could be worth, as demonstrated by Barrick, billions of dollars. Large amount of money. That IP survey was $56,000.
Wow.
I mean,
Incredible.
Crazy. Yeah. Why companies aren't using this more, I don't know, but we know from Kevin's history that it's very effective. So that, I would argue, is probably the best $56,000 we could have spent. And it brought us to this. This is the results we put out last week. This is high chargeability, as demonstrated by the dipole-dipole IP. And this is the low resistivity. So when you're looking at high chargeability and low resistivity as a combined thing, they're giving you a clear picture of sulfide units within the mineralization. So this is 11.5 kilometers, and this is the mineralization at Dumbwa. So obviously there's a big correlation. It looks fantastic. Our geological team is beyond excited. This is the first great view that anybody's ever had of how all of this works in correlation with that historic geochem, and now the sulfide system that we're going to drill. But it also shows us a few east-west faults that we didn't know existed. And if you look at where there was any historical missed drill holes, you can see that there's actually an offset in the mineralization east to west. The offset would explain where anybody missed. They drilled on the wrong side of it. It really gives our guys a clear view. So now we launch an aggressive drill program, should kick off in about the next week. And we are going to systematically drill Dumbwa for the very first time.
And what's the announced sort of size of the initial drill program that you guys are going to do? And I would assume this is core drilling because it's sulfide.
Yeah, so a couple of really important things. This is going to be all core drilling, all diamond drilling. And it's really important at this point that we don't use RC drilling, because what we need to understand in this first big systematic pass is, what does the structure look like? What does it look like at depth? How is it sitting? How is the mineralization situated? We know it's in schist. We know it's layered. We know that it's generally flat lying, but there's areas where it's pinching, there's areas where it's swelling, there's areas where it's folding or tilting more on its side. So now we go in and we get a great structural handle on it, and then we can go in eventually and infill with RC drilling. But, again, it takes us to these depth slices, which I've got up now. These are a little confusing for somebody that's not used to looking at these numbers. We talk about meters above sea level. Basically, surface is around 1,300. The Solwezi airport's at 1,327 meters above sea level. This is 1,300 down to what we could say 1,000. So this is actually 300 meters deep. So you can see the mineralization continuity is there. But again, driven by the IP, now we drill it with that roadmap. Every single drill hole will be based on the IP, not just taking a shot from surface. Everything will be methodical. Everything will be cost effective. And in terms of meters, total meters, as you asked, we're not putting a lid on it right now. What we're saying is each section will be driven by the IP and results. Let's just go. Let's drill. We've got a lot of capital in the bank. It's time to put it to work, put our money where our mouth is, and let's go and drill Dumbwa systematically, top to bottom, and let's go see what this thing really looks like.
Excellent. Well, thanks for an overview on that. We look forward to hearing how that drill program sort of is executed. And I guess my last question would be, when do you think you'd start seeing initial kind of results? What's your sort of lab turnaround time? I would imagine you're going to punch a bunch of holes, batch them, send them off to the lab. I would imagine it's a little bit, depending on Zambia, you got to ship them out of country and there's a bit of turnaround time. So what are we looking, 3 or 4 months for results?
I don't know if it'd be quite that long, but it is going to be some turnaround time simply because we will be shipping these. Typically, we send our stuff to South Africa. So anything that's sulfides needs to go down there. Oxides is a whole different thing because we're working with First Quantum. But this is everything going down to South Africa. So there's some turnaround time. Now, the drilling is slated to kick off within the next few days or within the next week or so. And then we're looking at exactly what you said, batch X number of holes, put those samples together, send them off for assay. We get the first round. So, if it took us a few weeks to get those first few holes done, diamond drilling is slower than RC. It's going to take a little bit of time. And then we'll turn those around. I think you're looking at least 6 weeks or so for results coming behind that first batch going in. But we'll have some more specific timelines once we get started, which we'll report in news releases as we get kind of a better understanding of the flow and that kind of thing. But, we will look at a fall and early 2026. That is going to be very steeped in news releases around results and what we're doing in the field. So it's going to be a very busy year.
Excellent. So that covers off Dumbwa, sulfide. What else do you have for us?
Well, so it's not just obviously isolated to Dumbwa. We do have 2 other targets, but let me cover them really quickly. Kazhiba is a brand new target. We found this last year when we were working on the Oxide plan. This is I mentioned at the very beginning, you'll recall the Lower Rhone hosted copper targets and how that's where most of the deposits in the belt are. This is a classic Lower Rhone hosted target. So this is the basement dome at Kazhiba. You can see that gray outline. This is a target that sits right where it should be, right in that host geology that's 85% of the copper in the belt. And we've confirmed this target through a few different layers, VTEM, traditional geochem, and this partial ionic leach sampling program. So we have a target that's 4 kilometers by 2 kilometers in size and length. It really is quite a big target. We've put together a drill program. The drill program basically looks like this. It's about 6 to 8 holes. We've drilled 4 already. Those 4 have been sent for assay, and we're going to start the drilling at Dumbwa, dig into that, and then come back and do the additional holes when we get the first round of results. So we can get those out to market. We can orient our drilling, stay on the target, get a good understanding of the structure before we continue, and then continue at Dumbwa. So that's Kazhiba, also a fantastic target we're moving forth on. And this one we've done, as I said, geochem, VTEM, dipole-dipole IP. This is what dipole-dipole IP looks like. It gives you this really nice, clear view as to what the mineralization is situated like. And then we have Mitu. So Mitu is the third of the 3. We had already gone and drilled Mitu. We have these 2 historic holes, 11.5 meters of 3.5% copper. which is a fantastic intercept when you're looking for these systems that are typically 10 to 20 meters thick, and 11.5 meters of 1.5% copper. So we have these copper hits. We know we have an oxide blanket down there, which is associated with sulfide, but we've never done the work in Kevin's kind of phased methodology. So we decided, let's go back to square one. Let's start at the very beginning. Let's go and take the samples we need to delineate any really good prospective targets, the area we've already drilled, and then follow through. Sampling first, dipole IP second, and then we go and drill. So we drill what we know. We drill, let's call it early 2026, late 2025, probably 2026. But the first step was partial ionic leach sampling. So we did over 1,800 samples, I believe. I think it's 1,500 over the main side of the target. We added another 500 or 600 samples. So let's call it, 1,800 to 2,000 samples. We are going to know any areas worthy of dipole IP based on that partial ionic leach sampling. When we get those results, we'll announce those. Then we can go ahead and schedule dipole IP follow up on any good targets, which we know will be these two zones here and any new targets we generate. And then we take the dipole IP and plan on a really big fulsome drill program to follow up on those in the new year. So Mitu is the third of our three big sulfide targets that we're working on right now. Certainly no shortage of things to be working on. And that brings us to the oxide copper. So should we dig into that?
Yeah, and maybe before we get going, maybe you could just explain some of the viewers what the difference is between sulfide and oxide in terms of like processing, why oxide is considered a pretty valuable commodity to have. Maybe you could just give us a little bit of an overview on the difference.
Absolutely. I'll put my my sort of geologist hat on for a moment. So when you're looking at the Domes region, I talk a lot about the sulfide deposits. So the big deposits, Lumwana, Kansanshi, Kamoa-Kakula, Sentinel, these are sulfide deposits predominantly. So oxides are the top portion of a sulfide system, closest part to surface, that gets oxidized and weathered. That material changes. It changes metallurgically. So what happens is you end up with this typically brittle material, largely malachite, sometimes bornite, that's at surface or near surface, that is mostly or often broken. And sometimes it stays in position, stays connected to a sulfide unit. And in other cases, it ends up displaced. It can be displaced by faulting. It can be displaced by drainage. There's a number of different ways that can happen. And we're talking about something that takes place over a millennia. This isn't something that happened yesterday. So, over time, these things can shift and move. But the big difference between the two is just the oxidation. So it's a different kind of metallurgy. And when it comes to processing, they have to be processed separately. You can't run them in the same mill. You need a different type of circuit. So oxides are done through an SX-EW circuit. Sulfides are done through a sulfide circuit. So when you're looking at these, it's really two different deposit styles. Sulfides are typically deeper. In this area, we're talking still less than 150 meters from surface. Oxides, you're talking about usually at or near surface. So two different things, two different kinds of metallurgy. But at the end of the day, both have a lot of copper. Both are economic, depending on size, and in different situations can be used. So, in the case of First Quantum's Kansanshi mine, they do have an SX-EW circuit. It's a heap leach, and it is really the economic engine of that mine. So it's pretty unique story as far as that's concerned. And different parts of the properties, different parts of the belt see more or less oxides. We don't see them with every deposit. It depends on the host, depends on where they're situated, and the time period in which those deposits were formed.
Excellent. That's a good overview. And with First Quantum having a heap leach oxide, processing circuit that might be important for what you guys have going on and important for them looking for more mill feed.
Absolutely. Yeah, it could very well be. And I think this is where we talk a lot about this. We have this cooperative exploration plan with First Quantum, and at the end of the day, we look at those oxides in two different ways. When we walked into the oxide situation, effectively, we've only ever focused on looking for sulfides over the 10-year plus history that we've had this project. So when we found oxides, because they're often connected to a sulfide unit, we addressed them as though that was the case. So we went drilling. We looked for the sulfide hit below the oxides, and at Kazhiba, we couldn't figure out why there wasn't a connection. You could drill through the oxides, and then you're in barren dolomites, which don't have any copper, and you're going, wait a second, there's all this high-grade oxide getting these great hits. Where's the sulfide below? And as we've come to understand, these oxides are mobilized. So I talked about how they can be loose, they can be brittle, they can get moved. These are mobilized, they're transported. They are not connected to a sulfide unit. Somewhere at Kazhiba, there is a sulfide source. Maybe it's Kazhiba target 2, maybe it's a different target. But at the end of the day, they came from somewhere. They didn't fall out of the sky. There's a large quantity of these high-grade oxide blocks of material. It's broken material. So it's, like a pile of large gravel malachite that's really high-grade copper. So in the case of our property, that's what we typically see. At Mitu, they seem to be connected. There's a correlation. They seem to still be in place. At Kansanshi, I believe it's a mix. I don't know for sure. But they devised a plan whereby they actually use their oxides for a couple of different reasons. We went at it as though when we realized they were a standalone situation, we made the plan to actually define them, find out how big they are. Now, to build a heap leach circuit, it's a cost of about 40 to 50 million, in some cases as low as 25 million. So it's a very low cost style of mine. You're looking at a heap leach operation. And in the case of the oxides we have at Kazhiba, and I think really let's focus on Kazhiba because that is the area we're doing most of our work right now. This is material that is literally at or near surface, within 40 meters of surface. So very shallow, right? And the economics of heap leach operations used in other parts of the copper belt, DRC and Zambia, they come with about a $25 to $50 million capex. If you had the requisite amount of tonnage and pounds of copper to make sense, you could build a heap leach operation and you could heap leach that material and theoretically make money hand over fist as they've done successfully throughout the belt. In our case, we're right next door to First Quantum. They have an SXEW circuit and they have a unique situation. So they have a smelter on site. And I'll bring up this next slide, just give people a little bit of an idea of the proximity and where this idea was born from. First Quantum has an SXEW circuit on site. They have a smelter on site. And their smelter produces somewhere between 1 million and 1.5 million tons of sulfuric acid a year. And they have oxides. So the acid is an environmental liability, and they can only stockpile so much. And in Zambia, you're not allowed to ship it or truck it. So they started using oxide copper, which is rich in malachite, to neutralize the acid. They heap leach the oxide copper. The malachite neutralizes the acid and turns it into water, and they turn that copper into cathode copper. Cathode copper is sold, and they make $300-400 million a year. It is a beautiful, eloquent way of moving an environmental liability into a benefit and making a ton of cash flow. So the economic engine of that mine is really the oxide circuit, and then they have their sulfide circuit. They're also shipping final products, so they collect all that margin. So it's a beautiful plan. Now, if we have a lot of oxides, and we're only 6 kilometers away, and we have a haul road that's owned by First Quantum running right through our property, it only makes sense that our material could easily be source feed for their SXEW circuit. And we know that they've depleted a lot of their supply and they're getting very low on oxide supply. So we launched this technical initiative with First Quantum, which we call a cooperative exploration plan. And it's really important to note for anybody watching this that this is not there's no binding agreement here. This is a loose technical arrangement, and I would almost describe it as a technical alliance where we're working with them under the idea that we both see a benefit in advancing these resources that we have on our property. And this is an exploration phase where we can define what we have, see if it makes sense to send it to First Quantum and work out an arrangement that would be a formal mining agreement. We always retain the opportunity to heap leach this material ourselves, come up with a plan for that if we have enough of it. But obviously, the benefit of sending it to First Quantum would totally make sense. So the phase we're in right now is this non-binding agreement. They don't own any part of our property. There's no formal agreement in place. It's a technical alliance. where they help us. They give us an engineering team. They give us some geological support. They give us data from their mind that helps us to define these in a way that would make sense for them. And then we've been doing assaying and metallurgical work at the Kansanshi mine to save all that time we were talking about earlier of shipping material to, let's say, South Africa. So what we've done so far is, with their guidance, we've gone out and done a fairly substantial amount of drilling at Kazhiba. And this is on an area that we refer to as the Kazhiba main. Okay, so you'll see that in news releases going forward, Kazhiba main. And this is the original oxide blanket that we found, that we started to go to work on. We drilled it in November last year. We put the results out in February. This is our work. It's not First Quantum's work. This is work that we've done. So this is Midnight Sun, drilling this resource. And what we're trying to do is get to a size and scale that we can put our arms around it. We can complete a resource. So these were the drill results. 21 meters of 10.69% copper, 26 meters of 5.5% copper, 15 of 3%, 7 of 4.6. I mean, these are ridiculously high grade hot oxide copper hits. And this stuff here, this is sitting at surface. This is just below surface.
How many drill holes did you put into the Kazhiba oxide blanket last year?
So we did about 18 holes. Last year, we drilled more than that, about 18 holes into the initial blanket. And then we put a number of holes out into different areas to test the constraints. And what we really want to come up with is, how big is the footprint to this thing? So I'll move off this slide and let's look at this one, which gives you a better idea. This pink blob here that says Kazhiba drilled high-grade oxide occurrence. This is the mobilized blanket that we found that we initially started working on. And this is, call it 500, 600 meters wide. It basically has a geometry that has not yet been defined. So we spent a bunch of time this year with our team. We added a new geologist named Adrian O'Brien, who is brilliant, fantastic geologist, used to work with Ross Beatty, was responsible for the big discovery they made privately of a stratabound system in Poland, and came over and joined our team over the last few months. So he's working with Kevin Bonnell. They've done a big assessment here. And what they've come back to is that, in their view, this oxide blanket, which basically looks like this, had never systematically been drilled previously, finally being drilled systematically now, but we've only defined somewhere in the range of 40% of what is at this thing, 40% of the footprint, 40% of the overall size of this oxide blanket. So now what we need to do is drill and find the constraints of this. And so we've just announced a 160 hole program. And that 160 hole program is underway now. We're probably somewhere in the 20 to 30% completed range, and month and a half, 2 months of drilling left. This is going to get us to something that we can put our arms around, and we can define a resource, and then we can make the decision how we move it forward and how best to do that. Talk to First Quantum, obviously work on that formal agreement if that's the direction we go. And what we're looking at here is something that really has the potential to be quite sizable, but very high grade. The grade was much higher than we expected based on those drill results I just showed you. And so now this grid will be built out in all directions, and we can really get to something that we can turn into a 43101 compliant maiden resource, and then come up with our plan moving forward. And most importantly, coming out of that were these additional targets. So these have just been explored with more partial ionic leach sampling. We've got at least 3 or 4 new blankets there, or new targets for blankets there. And the goal is to go out, define these properly with a drill program unto themselves. So 160 holes at what we call Kazhiba main, and then an additional program on top of that to cover off these new oxide blanket targets and start to build those in. So whether those are built into that initial resource or the initial resource is just Kazhiba main, the plan is get the drilling done as quickly as possible, all short vertical RC holes, and then dig in to the actual size and scale under a proper 43101 compliant resource.
Excellent. Well, thanks for giving us a good overview on the oxide. Is there anything else that you kind of wanted to cover before we maybe click out of the deck?
You know what? I mean, I think that's kind of it. I think we should kick around a couple of things. I don't need the deck to do it.
Well, welcome back. Hey, Adrian, thanks very much for walking us through the deck and walking us through the projects, the difference between sulfide and oxide. Sounds like you have some exciting catalysts, which we'll recap here in a moment. But maybe before we get to that, why don't we kind of cover off cap table? How many shares do you have outstanding? What's the insider ownership look like?
Sure, yeah. So we've got about 180 million outstanding now. We just had an exercise of warrants that went through. So we had a little warrant overhang. It wasn't anything huge, but about 4.5 million warrants that were at 50 cents that expired July 2nd. So those were predominantly exercised, and there's only a small amount that weren't. So the ones that weren't are off the table. That brought about 2 million, or a little better than 2 million, into the bank. So it beefed up our treasury. We are sitting on lots of cash now, north of 10 million, probably closer to 11 or 12. So we've got a lot of cash in the bank. We're in great shape to fund all this work that we're doing. So, we're not in any imminent need to raise money. We're out there to now take that capital, put it to work, and get out in the field. And, as you and I have talked about in the past, we brought in quite a few institutional shareholders this year. Insiders are still, 10 to 12%. We've got about 20% institutional now. So not only did we bring in a number of institutions in the May 2024 financing, but we also brought in a couple of bigger funds over the last few months that have been acquiring in the open market, which is a nice show of support, right? So we've broadened our institutional base. We continue to build that out. And it's been a phenomenal year. Like, we hit a peak valuation of 151 million this year. When we completed that financing, we were a sub $25 million market cap. And hitting 151 million peak valuation, TSX top 50 company, or TSXV top 50, venture 50, and now we've settled at about 120 million market cap, as you said, right at the very outset of this interview, trading around 65 to 70 cents. We stay in that 60 to 70 range right now. Just so satisfying to look back and see the gains that we've made this year. It's just been phenomenal.
And you still have a few warrants outstanding, right? You have 48 million odd warrants or something outstanding, if I'm not mistaken.
Yeah, so those are the 33-cent warrants that are connected to the 22-cent financing we did back in May. And those have a 2027 expiry. So they have a long, long window on them still. And we don't expect, I'm sure we'll get a little bit of trickle in as we're trading at that higher price. They're well in the money. They're 33-cent warrants, as I said. So, we'll see some trickle. That usually is how it goes. A few people will take them down as time goes on. But then obviously down the road, we'll see a larger exercise, which would bring in another $14-15 million. So really pretty fantastic as far as having that built-in mechanism for financing. But we didn't put a shotgun clause in there or anything. There's no gun to anybody's head to speed up the exercise. They've got that full length and that full amount of time to do it. So it's not an overhang that's going to be in our market or hurt us in any way, shape, or form as we move this forward and increase our capitalization with all the work we're doing.
And so there's not necessarily any imminent need to sort of raise capital for your 2025 exploration plans. You've outlined quite a few sort of plans, which we'll sort of re-summarize here. But you've got multiple drill programs that you have to do. So is there any sort of, are you fully funded for the balance of 2025?
Oh yeah, definitely. So, let's talk budgets for a second. I think that's another big one. When I talk about what we're doing right now, so let's say Kazhiba Oxide drilling, the RC drilling at Kazhiba, the diamond drilling at Kazhiba that we're doing on Kazhiba Target 2, the work that we're doing at Dumbwa around the dipole IP, and all the sampling that we just did at Mitu, the total cost for that was less than $500,000. So again, methodical, concise, thoughtful, cost-effective, let's get to the answers and not blow a ton of money on things that are not necessary or just, wildcat drilling and exploring with a drill bit. Now we move into the more costly aspect of this, which is diamond drilling at Dumbwa. This is the meat and potatoes of what we're doing. At the end of the day, Dumbwa is the big carrot. The Kazhiba Oxide thing is fantastic. It adds an optionality layer that very, very few juniors have. It creates a mechanism by which we could fund all of the future exploration of our assets, our sulfide assets. But make no mistake, Dumbwa has the potential for a very transformative discovery. This is the big carrot. Dumbwa is our flagship. And Kazhiba is also a fantastic target that we are building out and shaping. And when I say that, I'm referring to the oxides. And so, as we move forward now, we put a real budget to that, and we're probably looking at about $4 million, give or take. Still leaves us with a nice, healthy, robust treasury. But I think it's really important to mention that we're not capping the drilling at Dumbwa. We are simply starting the drilling at Dumbwa. This is a big, long-term, systematic approach that will continue. It'll continue to the end of the year. It may continue through the rainy season. We've not yet decided that. And obviously it'll continue in 2026. This is about building an asset now that can lead us to an end for our shareholders on the hopefully the acquisition front. We're not a mining company. We're not shy about saying that. I get really sick of watching companies arm wave that they're going to build a mine and operate and everything else. We are explorers. We are out there exploring. We are out there finding. We are out there developing assets to a point where we can sell them. That's the exit plan for our shareholders. That's what we see as the big return and the best strategy forward in the shortest amount of time. So we're building out these assets with that as a goal. But that's going to take time and money and drilling. And we are going at it very systematically and cost effectively. First round, 3.5 to 4 million. We'll just keep going, and we'll make the decisions on how we fund the full drill off of Dumbwa as we go. I mean, we're talking a 20-kilometer target. Clearly, the money we have in the bank is not going to cover all of that, but we have no need to raise money right now. We can go forward with all the money that we have and really attack this thing properly. Down the road, if we're successful on a formal agreement with First Quantum, there may be near-term cash flow from the oxides that can fund future exploration work on sulfide targets at Kazhiba, Dumbwa, and Mitu. But all of that is still remaining to be seen. But we're cashed up, we're very well funded, and we can get all the work we need done. So we're in attack mode now. We're drilling, we're putting our money to work, and putting our money where our mouth is.
So Kazhiba Oxide, 160-ish sort of drill holes. These are vertical, fairly cheap and cheerful RC holes. The idea there is that you should be able to then put sort of MRE, a resource estimate around that if you want. That would be one of the catalysts, I guess, for the next 6 to 12 months on that. You've got your Kazhiba Target 2, which you quietly announced a pretty small amount of drilling, I guess, in 2 phases. There's 3 or 4 holes that should be completed into the lab that we'd get some results on.
Exactly.
However, that was the first time you've ever drilled it. So, it's kind of a coin flip whether you're going to get anything, that the market might find interesting. You guys will probably find something pretty interesting on that. But anyway, that's a sulfide target that you've gone after. You're just imminently going to start your diamond drilling at Dumbwa, which is your flagship. This is a sulfide target, massive target, huge. You've completed about 60% of your dipole to dipole sort of aerial kind of survey, and you've begun the drilling there. Am I correct on that? Or you will be, I guess, starting the drilling in August. Yeah?
You've got that nailed. So basically, we'll be drilling soon. So the dipole IP, which will extend over the entire thing. That 56 line kilometers I described covers the entire 20-kilometer Dumbwa anomaly. And then the part that we have completed is where we are now focusing the initial phase of drilling. And then we'll complete the other 40% and lay out that as the future plan. So it's kind of a moving south to north type of plan, but totally built around those IP results. So let the IP drive the drilling so that it is geologically driven and supported every step of the way, so that we're staying on the mineralization, on the system, totally focused and very, very concise. So that is pretty much nailed.
Sure.
And we should pretty quickly.
And then we've also got to talk Mitu. So Mitu we kind of talked about a little bit, but maybe you could just re-summarize again the sort of work that may be planned for Mitu for 2025.
Yeah, so the way to look at Mitu is Mitu and Crunch are kind of tied together. We have some really fantastic targets at Mitu that sit in the southern part of the property. They're right in the lower Rhone, so they're right where they should be. We know we have an oxide blanket down there that is connected to a sulfide unit. We know we've drilled that sulfide unit, hit 11.5 meters of 3.5% copper and 11.5 meters of 1.4% copper. And these systems are typically 10 to 20 meters thick. So 11.5 meters is exactly what you're looking for in sulfides. But we've gone back to the steps that Kevin has laid out, starting at number one, which is partial ionic leach sampling. And what we've done is we've sampled the entire western flank of the Solwezi Dome. So if you go back and look at our property map, you'll see that it juts out to the west in kind of this rounded shape and then cuts down at an angle all the way down Mitu to where it connects with Dumbwa. We have sampled the entire western side of that dome. So essentially 2/3 of our property. Gone down, sampled this huge section, or let's call it half even, very, very large area. And that was somewhere between 1,500 and 1,900 samples. Then added a few additional samples to perceived extensions and zones that we want to cover off. And then those samples will drive dipole-dipole IP follow-up. It's exactly the same approach as Dumbwa. You go in, you carry out your partial ionic leach sampling, define good targets that are worthy of follow-up, carry out the dipole-dipole IP follow-up, and then once you complete that dipole-dipole IP, then you can go forth and start drilling again, just like at Dumbwa, systematically, methodically, and with the least cost possible, so that you're not wasting money exploring things that aren't going to hang together. And so we're probably looking at dipole-dipole IP sometime before the end of the year, and then follow up drilling on a large scale in 2026. So Mitu is a fantastic target. Those 2 diamond drill holes are extremely compelling. They're obviously big, high-grade intercepts, but we need to follow them up. We need to systematically approach this, and that's the whole name of the game for us. Letting Kevin lead the way. He's done it at Lumwana. He wants to do it again. He thinks he can do it again, and our project is where he's going to do that. So let's follow his methodology. Let's follow his thesis, and let geology lead the way to do this the right way. So that's the approach at Mitu. So, I mean, 3 very viable targets all underway at the same time.
Have I missed anything in terms of sort of catalysts and work for the balance of the year?
Not unless it relates to guitars.
So maybe we'll sort of like wrap up here. It's been a great session. You've gone sort of top to bottom, given us a good overview. Really sort of cleared up the various properties and how it all sort of fits together, and oxide sulfide strategy there. So appreciate that. Maybe we can talk. What's your travel schedule look like? Any imminent sort of like trips that you're sort of doing to get the Midnight Sun name out there?
That is an understatement. Yeah, a lot of trips coming up. So obviously, anybody around this business knows that the sort of conference season runs from September through December. There's conferences obviously in the New Year as well, but October, November are super busy. There's a lot of conferences, a lot of events. Midnight Sun will be represented at just about every one of them. And by that, I mean, I will be at just about every one of them. So I will be doing 2 things. I'm actually traveling to site. I'm going to be headed down there this coming weekend, taking a film crew down, and we're going to shoot a documentary style video of the project. I'll be there for the drilling at Dumbwa. We'll be doing video of the drilling at Dumbwa. I'll be visiting Kazhiba. I'll see all this stuff in person. Also be putting those photographic skills I mentioned earlier to work. We'll be photographing everything and everyone at site. So we've got lots of marketing images and lots of material to show people. I don't know about you, but to me, nothing tells a story like a photo or some video. Seeing it is very different than hearing about it. And looking at cartoonish graphics is one thing, but seeing pictures of the copper kill zone, seeing pictures of the drilling, seeing pictures of core, obviously all of that really goes a lot further. And seeing the people that are behind it as well, and hearing about the project in their words, which you will, from Kevin Bonnell and Adrian O'Brien and our team at site. So heading out there, I'll be there and back later on in August. And then in September, we start, of course, Beaver Creek. I'm sure you're going to be there. We'll be there. We've got an unbelievably full meeting schedule already. And from there, it just continues on right through the end of the year. So I'll be bouncing from here to Europe, back and forth. I'll be in the US, be at conferences all over the place. So, of course, anybody that's watching this, it's in a location we'll be visiting. Set up a time and place that we can meet up. We'll be happy to meet with you in person or come to these conferences, and we'll be happy to chat. But it's going to be busy. Anybody that knows Midnight Sun knows we're pretty marketing forward. So, we want to be out there telling this story every single day. Meeting new investors, telling a story to new investors, and spreading the word. So we'll be out there with full and total travel plans through the end of the year and into 2026. So it's going to be busy, Kier.
Well, excellent. Thanks for giving us a rundown. Enjoy living out of a suitcase, as one does in this business. And maybe just to sort of wrap up, maybe why should investors consider Midnight Sun right now, today?
Look, I think you have to look at the evolution of Midnight Sun. So we've taken some really important steps. We've moved from that early phase of work that we've been doing. We worked on this project for a lot of years. And I think to look at it properly and kind of assess the amount of work done, what we've accomplished, one has to think about the size of this property. This area, the Domes region, there's a reason why there's only a couple of juniors working in the belt. There's a reason why there's only one company situated in the heart of the belt. This is an area completely dominated by majors. This is an area that is not for the faint of heart. These systems are big, these projects are big, but the prizes are absolutely massive. So at the end of the day, we've worked on this for a number of years. We've made very important strides in terms of geological understanding. But now is the time, over the last 24 months, we have positioned everything for what we're doing right now. This is the time when we have built up to deploy the capital we've raised and to systematically build out these targets, drill them, test them, explore them, and see what we really have. So now we're at the cusp of, I guess, two things. We've de-risked the entire project by way of what we've put together. We've got this unique optionality that we've defined based on oxide copper and sulfide targets. And now we're systematically testing all of them. So what that means is that if you look at Midnight Sun today, look at our market cap at 65, 70 cent share price, and let's call it $120 million market cap, you have the very beginning of the most exciting phase in the evolution of Midnight Sun. And you have a period of time where it's going to be one major transformative event after another. And the work is being done, which means re-rates, and it means multiple opportunities for a re-rate. So this is probably the most exciting time to be a Midnight Sun shareholder, and a really, really great opportunity for something that is in the right jurisdiction, the right place, the right time in terms of copper and what's going on globally in terms of copper supply. So there's a lot of reasons packed into that as to why one would own Midnight Sun.
Well, I really look forward to the Kazhiba Oxide drill results, because last time around those were a good catalyst for getting more eyeballs on the story and getting a bit more liquidity and some price appreciation. Also, very interested, be watching very closely and look forward to watching your video on what's going on with Dumbwa. But anyways, Adrian, really appreciate you fitting me in before a busy, action-packed sort of schedule, before your big trip. It was great to catch up with you when you're sort of in the Kelowna area for a conference here in July, in the middle of summer. So good on you for doing that. That conference sort of selected a number of companies, a small number that they thought were sort of the most promising, and you guys made the list. So good job there.
Appreciate it. Those are the CEM conferences. I've been with those guys for a lot of years, and I think I met Howard when I first started in the business years and years ago. So I love what CEM does. They're actually one of my favorite conferences. And yeah, the way it works, if people don't understand how CEM works, they basically have a group of investors, a group of companies. The investors are on different tracks and the companies are on different tracks. So you don't have a lot of overlap from one conference to the next. And after you do your meetings, you do, let's say, 20 meetings in a day, the investors all go in a room, they vote for the companies they think were the best, and they defend their thesis. Why is it the best? They sit there for 2 or 3 hours. The issuers get to take a little break before dinner. The investors go into that. And then at the end, they tally up the votes and they come up with the top pick. And Midnight Sun was top pick in Kelowna. And out of the 4 CEM conferences we've done this year, we're 4 for 4. So Midnight Sun is definitely resonating with the investors. So it's a pretty satisfying and certainly, it's certainly very, very nice to see.
Well, excellent. Good job. Good job working the room and 20 one-on-one meetings in a day. Whew, that's a lot to sort of do. So good on you.
That's nothing. For Beaver Creek, we get 3 or 4 days of 20 meetings a day. That's
right. Yeah.
but it's
great.
always.
Well, Adrian, again, thanks very much. Really appreciate you fitting in some time. Again, Midnight Sun is one of our core TokStocks portfolio stocks. That portfolio is made up of 24 companies, 12 on the resource, 12 on the non-resource, and you're one of 2 copper names that we hold in our sort of formal portfolio. So appreciate you catching up with us. Continue to have a great rest of the summer and a good trip, and we'll catch up with you after you get some results out.
Sounds great, Kier. Really appreciate it. Appreciate the support, and always happy to get together and share the story and an update with you, man.
Thank you.
Excellent. Okay, take care.